Guys, let's talk a little bit about the economy. I don't really have much planned. There's just a bunch of news stories that I do want to talk about. Conventional wisdom says, as inflation goes up, you raise interest rates. This is exactly what's happening in the United States. As inflation went from 5%, 6%, 7%, all the way up to 9+%, the Federal Reserve incrementally started raising their interest rates. 0%, 0.25, 0.50, all the way up to around 2.5% that it is right now. And most likely, they're going to be raising by 50 or 75 basis points in the next meeting that's going to be happening in September. That is conventional wisdom. But then there's some places that don't believe in conventional wisdom and they have their own way of doing things. One such country is Turkey. I'm going over the news and I read this article. Turkey shocks market with rate cut despite inflation near 80%, guys. 80%. That is freaking ridiculous. Its main policy rate, which had been at 14% for the last 7 months, was cut to 13% in a complete mismatch to what other central banks are doing. Analysts expected no rate change. The move lower by Turkish central bank has taken markets by surprise. The lira, Turkish currency, slid 0.9% against the dollar following the news, trading at more than 18.1 to the greenback, near record lows. Guys, inflation in Turkey is running rampant. Inflation in many countries is running rampant. Earlier today, I was reading an article about the eurozone and the UK. Let's take a look at what's happening in the UK. UK inflation tops 10%, the highest of rich nations. Rising energy costs are likely to push European inflation rates higher, even as US inflation shows signs of cooling. Why is this important? Because with the UK, you get kind of a gauge what's going to be happening in Europe and the connection between Europe and the United States. I know a lot of people are very close-minded and all we care about or all we know about is what's happening in the United States. And at that, most people don't follow what's happening in the United States. They're just regurgitating what they hear on Fox, CNBC, so on and so forth. And that's not a bad thing, but you should definitely dig deeper to understand the underlying fundamentals, factors, and lagging indicators when it does come to inflation, recession, rates, and generally the micro and macro economy, because this affects not only you, but your family, both present and future. The UK's annual rate of inflation moved into double digits in July and is set to rise even higher by the end of the year. The UK's Office for National Statistics Wednesday said consumer prices were 10.1% higher in July than a year earlier, up from 9.4% in June. So back in June, they already had a higher inflation rate than we had in the United States. And I quote, "Inflation figures continue to paint a worrying picture for consumers and businesses alike, and price pressure are set to build further," said Alfaz Palaja, lead economist at the Confederation of British Industry. And then they talk about the eurozone. This is a really cool chart. Figures to be released Thursday by the European Union Statistics Agency are expected to show the eurozone's annual rate of inflation rose to 8.9% in July from 8.6% in June. By contrast, the United States eased to 8.5% from 9.1%. And as you can see, the United States is in pink, while the Eurozone is in gray and the UK is in blue. The UK is going up, the Eurozone is going up, but the United States is going down. So it's pretty crazy. Why is the United States going down? Well, I just think that they're being really aggressive with the federal funds rate. And although it's not a 100% easy solution, and there's so many other factors that are coming into play, that is one of the reasons why inflation is going down in the United States. One of the reasons why inflation is going up in countries like Turkey, for example, is because they're doing the opposite of conventional wisdom. They're doing the opposite of what Economics 101 teaches you. Easy money is easy to spend. Hard money is harder to spend. It's freaking simple. When you're in a casino and you have a chip for $1 million, you will use that chip a lot faster than if you actually had greenbacks of $1 million, right? JP Morgan sees an increasing sign that global inflation is set to ease with prices of food and many commodities down from recent peaks. However, they expect the disinflation to be evident first in the US, with Europe set to lag behind despite some recent easing in the prices of goods leaving the factory gates. That's what I'm trying to say. There's lagging indicators in the United States, but then there's lagging indicators in the entire globe. So for people investing in Europe, people investing in the UK, they're probably saying what's happening in the United States. And they're probably like 3 months behind what's happening in the United States. So they're trying to foresee this and make their own moves, just like we're trying to foresee what's happening here, and we make our own moves. Right now, there's an absolute battle in the United States, and nobody knows what's happening. Nobody knows if this is a bear market rally and we're going to drop further down, or if this is actually a bull rally after the bear market ended. So we don't know if we're in the middle of a bear market or at the end of a bear market, and this bull market is going to rally and keep rallying. Today, stocks were a little bit green. Yesterday, stocks was in the red. But over the last week in general, stocks has been going up. I read a report earlier today that spending has started to go up with the consumer. Let me read you this report. Retail spending held steady in July. U.S. consumers continued opening their wallets last month, shifting savings from falling gasoline prices to purchase of everyday goods as they weathered high inflation and a slowing economy. Overall sales, a measure of spending at stores, online, and in restaurants, were flat in July compared to the prior month's revised 0.8 increase. But a measure of spending that strips out gasoline and auto sales rose 0.7%. And I quote, "We had 9 weeks of gas prices falling. The evidence from this is that people saw the drop in gas prices and said, this is good news, let's go shopping." He added that consumer spending appears to have gotten off to a pretty strong start in the third quarter. And earlier today, yesterday actually, I apologize, we had the release of the Federal Reserve minutes. And the Federal Reserve minutes, released separately Wednesday from the last month's policy meeting, said officials agreed they needed to keep raising interest rates enough to slow the economy and likely would need to hold rates at that level until it was clear that inflation was decelerating. And this is the right thing to do. There's a futures market that essentially they bet on what the Federal Reserve is going to do. Before the last CPI report, they were betting 2/3 that they were going to raise 75 basis points in September. And 1/3 was that they're going to be raising by 50 points. Right now, 60% is saying that it's going to be 50 basis points, while 40% is saying that it's going to be 75 basis points. If the United States is smart and the Federal Reserve has some brains up here, they're going to pull the Band-Aid off and make sure that they're going to be raising by 75 basis points. Why? We didn't win a battle. We didn't win a war. We literally didn't do anything. We just shifted and pivoted what's happening right now. And we don't have inflation on the run, but we have inflation worried. So what we need to do, we got to pound, and make sure we beat the shit out of inflation. And the only way to do that is not to let up. If we let up and start raising by 50 basis points or 25 basis points, well, inflation will go back up. I promise you, in 2023, we will still have rampant inflation. We need to go heavy. We need to do the opposite of what Turkey is doing right now. And we just need to do this because we finally see a shift in momentum happening in our economy. After we get ours under control, the UK and the eurozone will follow. Now, they have different issues because of the geopolitical tension that's happening in Ukraine, the war that's happening in Ukraine with Russia. If you were smart, because of the inflation, and right now the US dollar is 1-to-1 to the euro. Before, do you remember, it was like 1.6 for 1 euro, 1.8 for 1 euro, I even remember. So it's possible if you have the money right now, Europe might be a great destination to invest in some real estate because you're going to get the best bang for your buck if they don't make you pay in US dollars, because you might just be getting the best bang for your buck. A lot of people buy in Europe and they hire a manager and they use Airbnb. Not that I'm a financial advisor, not that I'm a realtor, and not that I'm an attorney or CPA. I'm just an entertainer and educator at best. So with that said, can you please give me the like, share, and subscribe? This, all you see around me, this isn't cheap. It costs a lot of money. And I need those likes, shares, and subscribes so that the YouTube mighty algorithm is going to share me with more people so I could actually get paid for these really annoying ads that everybody skips through. Thank you very much for the people that actually watch the ads because I do get paid more money for those ads. Now, I have been following the gas prices ever since it was $5.01. Today, the price of gas is $3.93. Yesterday was $3.94. A week ago, $3.99. A month ago, $4.51. A year ago, $3.18. You see how much closer we're getting for the price that it was last year? Now, $3.18 is a far cry from low $2, but I promise you, people are starting to see the difference. You could see everything is starting to get cheaper, from food to products to goods, because gasoline runs everything. Now, I want you to pay attention to this chart. The chart says 12-month percentage change consumer price index selected categories July 22nd. Why is this important? As you can see, food is just over 10%, while energy is around 33%. Energy outweighs food by around 3.5 times. However, this is what you should be seeing. Food should be 14%, while energy should be weighted at around 7.5%. So food should be 1.5 of energy, but in this case, energy is 3.5 of food. So if you take the inverse reaction, energy outweighs food by like magnitudes of like 6 of where it should be. So if energy keeps going down, then everything else shall go down as well. Now, I've also been tracking the price of crude oil. Check this out. This is the price of crude oil. Crude oil is gasoline that you actually put in your car after distribution and after refinement. This is the chart over the last year. We are now only 38% inflated over the last year. Over the last 6 months, we're actually cheaper than we were 6 months ago. And for the last month, we were down 11%. We peaked right here at around June 8th, June 9th at around $122 to $124 a barrel. Now we're at $90 a barrel. If you go to a year back, we were right around $65 a barrel. We would like to get back to around $50 a barrel. Things are not down overnight. Things absolutely do take time. We still have a very strong jobs market, which means raising interest rates, the economy can absorb it. So the Fed has room to do what they need to do. If the Fed is smart, they're going to keep attacking. And if they keep attacking, they're going to get inflation all the way down. What's all the way down? I believe to around a 5% level, somewhere in 2023. Once the Fed gets it to around a 5% level, I have a feeling that the Fed will stop raising interest rates. For me, the federal funds rate is going to stop somewhere between 4.5% to around 5.5%. If that happens and they start lowering the rate or stop raising the rate, well, the entire market is going to rally like a mofo. You want to be prepared for this to happen. In my personal opinion, I think that we're through the worst, and I think that we're going to get something good in the future. Guys, thank you so much. I hope you enjoyed this little update about what's happening in the world. I hope some of these things make sense to you. And I'm not trying to teach you anything. I'm just trying to educate you with some data. What you get from that data is up to you. But make no mistake about it. If you as an investor are not paying attention to this type of data, specifically in these crazy times, then you're doing yourself a huge disservice, including if you are a crypto investor. It's not just about stocks. It's not just about real estate. Crypto now acts as a subsector of the NASDAQ, of the tech sector. So what you guys get out of this or don't get out of this, that's on you. Thank you so much. Don't forget to like, share, and subscribe. The Berg is out.